Most traders spend years looking for an edge with indicators, multi-screen setups, and hour-long pre-market routines, and they're still losing. However, the strategy I'm about to show you made me over $22,000 on a single trade, which only took 30 minutes, and the only thing I needed was a single candle. I'm going to break down exactly what that setup was, why I took it, and how the whole thing played out in real time. And I'll also show you a few other examples across crypto, forex, and gold, so you can see that this wasn't just a fluke. But first, let me explain how the strategy actually works. The whole thing is built around what's called the 4-hour range. Here's all it is: the high and the low of the very first 4-hour candle that forms at the start of each trading day. That's the range. It's between these two lines. Once those lines are drawn, you drop down to the 5-minute chart and wait. You're looking for one specific thing. You need price to close outside the range and then close back inside. That's the entire setup. When that sequence plays out, you have your entry. Your stop loss goes at the extreme of the breakout move, and the take profit is always set at 2 times your stop loss size. So step 1, mark behind the low of the first 4-hour candle. Step 2, wait for a 5-minute candle to close outside the range, then close back inside. Step 3, enter the trade. That's the checklist. Now let me show you exactly how the $22,000 trade happened and a few of my other live recordings of trades I took. The morning started the same way it always does. I marked the 4-hour range on Bitcoin, high and the low of the first 4-hour candle that formed that day, New York time, fully closed before I put a single line on the chart. I've done this so many times at this point, it's automatic. So then I drop down to the 5-minute chart and I start watching. Bitcoin was trading inside the range, just moving around. Nothing was happening as yet. And then it started to push toward the range high. I watched it climb, touch the level, push above it, and the candle close outside. Anyone can see a candle break a level. What matters is what happens next. The next candle started forming and I watched it carefully. It opened above the range high and then price started pulling back and then it closed back inside the range. Right there, that's my signal. But before I do anything else, I need to check the MACD, and the MACD was negative. When the MACD is negative, that means that the signal line is above the MACD line. This orange line you can see right here above the blue line. That means it's negative. That means the trend is a downtrend. So momentum was already pointing down even as price was trying to push higher. That right there was the divergence between what price was attempting to do and where momentum actually was. The setup was saying short, the momentum was saying short, so I go short. I put my entry on the close of this candle inside the range right here. Stop loss went at the high of the breakout candle, the very top of this failed move, because if Bitcoin went back up there, then I was wrong and I need to get out immediate. My take profit was set at 2R. That means it's twice the risk. Same target it's always been. Then Bitcoin dropped. Strong red candles, barely any pullback, each one closing lower than the last. I was watching it move and remember thinking, just let it run, don't touch it. You've done everything right up until this point. So it hit the 2R target and I closed the trade. And I sat there for a second and I was just looking at the number on the screen. $22,187 from one trade on a Friday morning. I didn't add to it, I didn't move the target, I didn't do anything clever. I just followed the same rules I always follow and the market paid. That was my biggest trade of the year. And the reason I'm bringing that up isn't a brag, is because of something I think about a lot when it comes to trading and risk. And I must remind you guys, these results aren't typical and trading involves serious risk. First things first, every morning I mark the 4-hour range. That's the high and the low of the very first 4-hour candle that formed that day, based on the New York time, of course. Those two levels become my entire game plan for that day. No indicators cluttering the chart, no guessing, just the range. So my first trade was on gold. I'm watching the 5-minute chart. So as we can see, price starts pushing down toward the range low and breaks below it. And here's the key. The candle actually closes below, not just a wick, a full close. The wicks don't count, of course. Then the next candle closes back inside the range. That's the sequence. Breakout, come back in. That's my long signal. The range low just acted as a trap. Price dipped under, grabbed liquidity from the people who were holding shorts, and then came back inside. It's a classic move, but before I touch the buy button, I check the MACD. In this case, it happens to be positive, so momentum is pointing up, which lines up perfectly with the long trade. Both the setup and the momentum are telling me the same thing. That's confluence, and confluence equal confidence. Entry goes on that candle close back inside the range. Stop loss is at the exact low of the breakout move, because if price goes back down there, the trade thesis is dead and I'm out. No arguments. My take profit always remains at 2R, twice the risk. That's the target every single time. So as you can see, price nudges up, starts to look like it's working, and then the market just said no. No fake out candle, no warning shot. It just rolled over and came back down through the range low. Broke the stop, and that was a $1,200 loss. Even though I followed all my rules, the market just didn't care. Now at this point during the day, I was about ready to quit because I had waited for that setup for about 60 minutes. But then I took a second trade, same day, different market, Euro USD, 4-hour range is marked, and I'm back on the 5-minute chart watching price move inside the range. Then it starts climbing, price pushes above the range high, and again the candle close outside, full body above the line. I've seen this before. Price breaks above the range high, which triggers all the retail buy orders that have been sitting above it, breakout traders jumping in late, stop losses being hit on shorts. The market grabs all of that liquidity and then reverses. It's a stop hunt, and the candle closes back inside the range is the confirmation that the breakout failed. Next candle closes back inside, that's a short signal. Now I go to the MACD, which is negative. Momentum is already pointing down. The setup is saying short, the momentum is saying short. When everything is aligned like that, there's nothing to deliberate about. You take the trade. Entry on the close, stop loss goes at the high of the breakout candle, the very top of that failed move, because if price goes back up there and crosses, the whole setup is invalid and I'm out. Take profit at 2R as always, same process. Price drops immediately, no hesitation, no fake out, the kind of move where you set the trade and lean back because there's nothing left to do. Okay, so recap for today. Terrible day, took one of the biggest losses today on gold, but we'll get into that. The morning started out pretty decent, however. It started on Bitcoin. The 4-hour range was marked and I was on the 5-minute chart watching price move through the morning session. Bitcoin had been drifting lower inside the range, slowly and steadily, nothing alarming. Then it pushed below the range low, a clean break underneath the level. This was an excellent trade setup. The next candle closed back inside the range. That was the long signal. Price had swept below the range low, grabbed the liquidity sitting under it, stop losses, stop entries, all the orders that had built up below that level, and then it snapped back. You can see the sellers had lost control. That reversal candle closing inside the range was all I needed to see. So I checked the MACD. It was positive. Momentum is already pointing up, setup pointing up. So I put my entry on the close, stop loss at the low of the breakout candle, target at 2R. I decided to drop down to the 1-minute chart to get an entry this time. I sometimes do this. Bitcoin moved immediately. Strong green candles, barely any retracement trying to shake me out. 40 minutes later, it hit 2R. I closed it. A nearly $4,500 winner. The morning felt good. Too good as it turned out. So here's where the day changed. I switched over to gold. I try not to switch what I'm trading for the day like this, but the 4-hour range was already set, so I took a look. Gold had pushed above the range high. Then the next candle closed back inside. So that's a short signal. My MACD was negative, momentum pointing down. By every measure I used, this was a valid setup, but I was feeling something after that Bitcoin trade. Not arrogance exactly, more like momentum. Like the day had a rhythm to it. When I went to set my position size, I sized up, not outrageously, but a little bit more than I would on a standard trade. I told myself the setup was clean, I was reading the market well today, and there was no reason to leave money on the table. So my entry went on the close back inside the range right here, stop at the high of the breakout candle right here, target at 2R, everything placed. Gold dipped a tiny bit in my direction and then a dramatic reversal against me. It pushed back up toward the range high and I watched it reach the high of the breakout candle. Then I watched it take out my stop like it had been pointing to that level the entire time. Because I had sized up, what would normally be a controlled 1-hour loss hit very differently. $13,250 in the red, gone in under 2 hours. So I closed my platform. There was nothing else to do. Down nearly $14,000 on the day, so that makes me down net $8,900. The Bitcoin trade didn't make money today. It made the gold loss a little less expensive. So as you can see, this is super simple. By the way, I'll leave a link down below to the platform I used throughout this video. Exness allows you to make instant 24/7 withdrawals. It's also cool if you're just starting out because you can start with as little as $10. The link will be at the top of the description below and in the pinned comment. But a good platform and an easy strategy are only 45% of what it takes to be successful at trading. The other 55% involves your psychology. Click this video next to get a full understanding of how to master this, because this is what holds most traders back.